In the energy quadrant, taking a look at the December crude oil futures, which attempted to rally today, but the bounce failed as crude oil turned around and closed lower to end the session and truly got nowhere close to filling the gap from the October 26th closing price to the October 28th opening price. The high today, 68.52, was up 1.69%, and the low today, 66.72, was down 0.98%, so almost a full percent, coming close to testing that October 1st swing low. And if we get below that, on the way to the 2024 low of 67.31 reached on September 10th. As we end up the day, we're down still right around 0.3% coming into the close. Macroeconomics is starting to become more and more the policy of crude oil investors and traders as the de-escalation of geopolitical tensions have given way to continued fears of a slower global economy. And these geopolitical tensions have been a big factor in providing a floor underneath crude oil prices for quite some time now. The call skew that was in the market through October seems to have all but disappeared, and it's a likely sign that the fear of geopolitics affecting crude oil supply and subsequently crude oil's price in the short term is no longer a dominant strategy. We also have crude oil moving into its seasonally weakest period of the year for demand. According to the last 20 years of seasonal data, crude oil moves sideways in mid to late October and then collapses until about the first week of December. Understanding, however, that seasonality is not a solid trading strategy by itself, but it's more of a headwind to price. So you still could get big rallies through this period of time where seasonals are weak, but it's just something to think about as we go forward.